Hi, thanks for joining me on my market report. My name is Mike, and if are new to my channel or videos, you'll find that we talk about mortgage rates. We kind of get into what's impacting them on a daily basis, whether it might be something from the headline news or a combination of that with maybe some economic data that got released that day, or sometimes things just don't make sense, and it's due to maybe change of sentiment uh, in the markets where investors may feel that good news is now bad news or vice versa, and that you may see adverse effects on there. So we're here to kind of point these things out for you to kind of give you some guidance as to what's driving these rates on a daily basis. So if you're in the real estate industry, hopefully this will give you some good talking points. If you're a consumer looking to refinance or purchase, hopefully this will give you some ideas as to whether if you want to lock in sooner or later, give you at least the trend as to where rates are going. A little bit about myself is I am a loan officer. I do work with a national lender, so I'm here to answer any questions if you guys might have, whether it might be something in regards to mortgage rates or if you want to ask something about mortgage uh, programs are available out there or whatnot, please feel free to reach out as well. We're here to help you guys out. And if you guys are looking to refinance or purchase, again, we would love to be able to earn your business, so please reach out as well and see what we can do for you guys. So without further ado, we'll start off with the economic data that's being released today. And today's kind of the big day today. The Bureau of Labor Statistics released their data for our jobs and for the month of November. We'll start off with the average earnings on a monthly basis, month over month for the month of November. So back in October, it rose 0.4%. Forecast is continuing that same trend of 0.4% for November. And it came in a little bit shy at 0.3%. Now, here's the big number they're looking at is the non-farm payrolls. So October's data was revised slightly higher from 531,000 to 546,000. There's a forecast for November at 550,000, and it came in much less at 210,000, which is obviously a big disappointment for the markets. We'll kind of get into that a little bit here, but we'll continue for the moment. Average work weeks in hours for the month of November. So in October came in at 34.7. Forecast is kind of for 34 point, continue that same at 34.7, and it came in at one tick higher at 34.8 for the month of November. Now here's the unemployment rate for the month of November. So October it was at 4.6%. Forecast was kind of for a slight dip at 4.5, and it jumped. Actually, it slipped a lot further down to 4.2%. So that was a pretty big dip there, especially considering that we only had 210,000 new jobs created. Now, we also had factory orders for the month over month for October. So September was revised higher from 0.2% increase to a 0.5% increase. Forecast is kind of for a 0.5% increase in October, and it jumped up 1%. So obviously that's really good news that we're getting more factory orders. But the problem is, of course, is trying to get that stuff out there, finding the manpower or even the materials to get that stuff out there to help out with the supply chains. This is what's kind of dragging things down. Now, last but not least, we got the ISM non-manufacturing PMI, which is geared towards the services industry. This is anything above 50 on this index is considered expansion or optimism. So back in October, it was at 66.7. Forecast was supposed to dip a little bit in November at 65. However, it went the opposite direction and went up 69.1, which is a very good number here to talk a little bit about. Now, to touch on that, again, the kind of like the ADP, it came in really disappointing. It came in about just over 200,000 when they're expected just a little over 500,000. This was important primarily because if you've been following my videos this week, we've talked about the Fed basically saying that there's going to be probably a policy shift coming into their next meeting at the FOMC this month. Now, what that shift entails is that they are looking to speed up the tapering process so that way they can start raising interest rates at a higher pace. Last month, they already announced they're going to do tapering, but now they're talking about increasing that tapering to a faster pace, so it'll be done quicker, and then they can start raising rates much quicker. They also removed the transitory in terms of inflation. So what that means is that it's not just temporary. Inflation could be here, and that's why they want to start raising rates to try to stave off that inflation. So one of the big things that they talked about was before they start moving any of this tapering stuff or stimulus, was it was tied towards jobs, but with jobs not really where they're looking at, as robust as they were thinking, getting these large amounts like the 500,000 or greater, and only getting easily 200,000 jobs in November. They kind of wonder if the Fed might have second thoughts here. So they'll wait and see coming in this month's meeting. We'll see what they say. It seems like the Fed's pretty much got in their minds that they can continue this regardless whatever jobs does, but we'll have to wait and see. It was also reported that there was another case from, I guess this time a Minnesotan resident who was in New York, got the Omicron. So it's a second reported case of it. And what they're kind of figuring is it seems like it might be a more mild case of COVID. So it may not be as, it may be a little bit more transferable, but may not be as deadly as some of the other variants we have experienced. So this may be not as bad as what initially may have been feared. I guess it's more the uncertainty is what kind of spooks the markets versus what after they learn a little bit more information, they can gather a little bit more information. They can ease up a little bit. So let's take a look at what's going on with mortgage rates today. Stocks are down. What's going on because there's a lot of uncertainty in these markets today. As you can see here in the mortgage-backed securities with these wide swings with the candles. These are wicks, and that's because we were way down here at one point and we're way up here. So there's been a lot of movement here in the markets this morning. And here's we're currently right here up about 13 basis points. A lot of lenders are already priced in a better position today, so our pricing should be better than what we did yesterday. We did have a price change yesterday due to the drop that we had, so our pricing should be a little bit better. We're probably closer to pricing where we started the day yesterday, but we did have some price changes for the worse as they deteriorated later in the day here. So our pricing should be closer to what we had beginning of the day yesterday, if that makes sense here. And then, of course, you see here we did touch off the 25-day moving average. Here's the volatility of the day so far, so you can see the big changes here, kind of big fluctuations here. So let's go back here. We'll take a look quick at the treasuries in 1 second. And the treasuries again. Oh wow, we're actually went down to 1.38 now. So we're breaking below. We were down to 1.41. Now we're even breaking lower than that. And as you see, we were even up at 1.46, 1.47 at one point earlier today. So it's had some volatility as well. But right now, it's really kind of tanking down to 1.38 currently. Now, for the national median or average for conforming loan limit price mortgage rates, here we'll take a look at that and keep in mind that these do have points built into it. So, and try to explain a little bit about rates is that rates do have a lot of variables that go into pricing a rate. So that way you understand that why you may have a different rate quote than your than maybe a friend or neighbor or anyone else may have something different because a lot of times it's dependent on, of course, the loan program that they may have. It's very dependent on the FICO scores, the amount of equity and or down payment. So if you're buying the down payment, if you're refinancing the amount of equity, and of course that's based off what you have on appraised value and what you currently have as a mortgage. There's also the type of property you might have, or if it's a single family, or if it's a condo townhouse or a multi-unit property, or even if you're, and then we also got breakdowns from a primary residence to investment properties and stuff. So there's a lot of different variables that go into it. So they take into account all of those, not just one or two of those items. They look at all of that together, and that's what kind of determines your pricing for that day. Now, to get back to what we're talking about, here's the 15-year at 2.57, and the 30-year is at 3.21. So they did come down a little bit, even from yesterday, or about the same as yesterday. Well, actually, it went up a little bit yesterday, but yeah, down for a little bit from yesterday. So that's obviously the good news. Thank you guys so much for watching. That's pretty much the wrap for the day. If you guys got questions, please reach out. We're here to help you guys out. If you like these videos, please help us out by smashing that like button and share. We really appreciate you guys. Thanks for watching, and we'll look forward to see you guys on Monday's video. Have a great rest of your day. Bye. and enjoy your weekend. Bye bye.